everyone for joining us today. My name is David Ring. I am the Senior Marketing Manager here at Mortgage Capital Trading. We're excited to present this video in partnership with Freddie Mac. This video will be the first video in a two-part series. The first video will be discussing leveraging options in a volatile market and ensuring your execution strategy includes servicing considerations. The second video in this two-part series will discuss benefits of Freddie Mac approval and MSR retention strategy, as well as a review of how cash flow and capital position may affect your retain versus release decisions. Today, I'm excited to pass the ball to our moderator of these two videos, Mr. Bill Shirreffs, who is our head of MCT's MSR services and sales operations. Bill, take it away.
Excellent. Thank you very much, David. What we'll be discussing today should resonate for our listeners. You know, with rising interest rates, overall declining mortgage production, price competition, pressure on margins, the servicing asset is an even more critical element and an essential component of the overall best execution equation. But first of all, let me start off by saying we greatly appreciate Freddie Mac's long-standing partnership. MCT and Freddie Mac continue to work collaboratively to drive efficiencies for the industry and our mutual clients. And those efforts are ongoing. Thank you for your efforts to ensure continued mortgage liquidity and sustainable home ownership. We greatly appreciate your support and participation today in this webinar as well. Like David said, I'm Bill Shirreffs, head of MSR services and sales operations for MCT. We're fortunate to be joined by three industry veterans with extensive industry experience. They all bring a high level of insight on the servicing side of the business, each from a different perspective though. Starting off, we have David Burruss. David is MCT's MSR Services Sales Director. David has broad experience in the mortgage space, predominantly holding national accounts roles for mortgage insurance companies and Freddie Mac. Prior to joining MCT over 2 years ago, David was the Director of Mortgage Servicing for PHH, where he gained a lot of exposure to servicing and sub-servicing strategies. Followed by Azad Rafat. Azad joined MCT about 9 months ago from Computershare as our Senior Director of MSR Services. Azad brings a wealth of experience in mortgage servicing, including analytics, operations, modeling. He has actually and small portfolios, MSR portfolios. As companies such as Homeside, Lending, and Everbank, he's produced thousands of valuations during his career as well. We're lucky to have Azad on the MCT team. And finally, we're fortunate to have Hakan Beygo from Freddie Mac. Hakan is Freddie Mac's Senior Director of Bulk Loan Acquisitions and Servicing Released Execution. Hakan has spent most of his career in trading and risk management leadership roles, gained extensive experience with companies like Wells Fargo, SunTrust, and now Freddie Mac. Hakan was one of the principal architects of Freddie Mac's exchange program, which proved to be very beneficial for seller servicers following the onset of the pandemic, and it continues on today as a huge benefit. So with that, that's the setup. Those are the speakers. Again, we're happy to have all of you guys. Let me turn it over to David Burruss to get us started.
Thanks, Bill. I appreciate that, and looking forward to the discussion. Obviously, one of the things, if we learned anything at all from the pandemic, it was the fact that each of the lending community definitely needs delivery options in a volatile market. And particularly as COVID broke, we went from, typical multiples in the marketplace to zero and sometimes even below zero for servicing. So those who were already approved for servicing had the ability to maintain and hold on to those loans to try to keep some of that value. Those that didn't had to sell away and really kind of gave that value away to the aggregators that they were working with, lacking of the choices that they had. So it just shows that we continually need to review potential options and potential delivery methods. So with that, Hakan, do you have a few comments on that?
I do. Thanks, David. I'm happy to be participating. And again, Freddie Mac also values our partnership with MCT. So I'm happy to be here. Yeah, optionality, that's the key. And that's one of the most important things you can have, not only in 2020 if you had it, but also now, even though the situation's a little bit different. So 2020, with the advent of the pandemic, obviously the bid went away in many ways for co-issue and other types of executions if you wanted to sell servicing. we were fortunate in our program, which we'll talk about in a little bit, our cash released exchange, to actually still have a viable bid. But if you didn't have the option to hold, you really were kind of put into a position where you had to take an option and you didn't have any ability to do anything differently, and you had to wait it out. It's interesting because now we're in a similar situation where there's a lot of entrance into purchasing servicing, but multiples have changed even over the course of this year, and a lot of entities that were really kind of participating in the subsequent transfers, the large pools, are taking a pause. And so again, if you don't have the optionality, you don't have the ability to respond to what the market is giving you, then you're actually at a competitive disadvantage. Optionality is the key, and having options, not just with being able to retain versus sell servicing, but also who you sell servicing to. That's the key in this environment, and it's been consistent over the last several years, and something that you need to be looking at.
Hakan, would you recommend for the listeners and originators that are listening in, if they're not currently approved to service and don't intend to retain servicing in the near future, would you recommend that they proceed and pursue their servicer approval, just to your point, for the optionality?
Absolutely, Bill. And it's something that, again, getting the ability, getting the approval, once you have it, and then you have that option available to you. But if you don't have it, or if you're being reactive to getting it, then it can take some time to get approved as a servicer. And by the time you get approved, it may be that you've lost that optionality when you needed it the most. So absolutely, if you have any thought of retaining servicing or want that optionality, you should be right now trying to get approved.
And that optionality includes not only retain versus release, but also co-issue as well, and also includes bulk transactions, to your earlier point, to having the flexibility to leverage that asset in the future if you need to.
Absolutely. There's multiple options available to execute if you do choose to sell servicing, and having all of that available to you is the key. You're not restricted to one or the other. At least with Freddie Mac, you're not. You can participate in all three of our programs that we have available to you, and there's no restriction on your participation. So having all three available just gives you more optionality and gives you more choices, and it gives you more prices to try to execute against if you want to sell.
So David, Burruss, how can MCT play a role in this process and thinking about the optionality?
What we do is we really, it's a great question, Bill. Unfortunately, a lot of clients come to us with this kind of, question for us to help them answer. And fortunately, we can help them with the whole process. First of all, in many cases, folks are trying to figure out, should they retain or not? Do the dynamics make sense for them? Does just the whole setup and what they would have to go through to become approved for servicing, make sense to them? Second of all, they're trying to figure out a strategy. Why would we retain? How does it really help us? And they kind of really sort through that. And they typically talk with us about those options. And then they also typically talk to Freddie Mac as well. So then it becomes, well, if once I've decided I'd like to set up servicing, what do you do next? And very often they need to get, it's helpful to go to consultants who are specialists in this area to help get them started. We've got contacts with a lot of folks like that are very good at getting people off and running. And to Hakan's earlier point, this takes time. It's not something that's going to happen overnight. It's not purposefully arduous, but it does take a little bit of time to get set up. Part of that is selection of deciding whether to subservice or to service on your own. So those are some big questions, and we can help with that. We certainly have a full knowledge of subservices available in the marketplace, and we also have a good solid understanding of what it takes to get set up to run your own servicing if you chose to go there. So once you get all those steps into place, then we can start to talk about tools about how to make assessments, how to get appropriate values for your book, how to make the decision which loans to retain, how to manage your book, and ultimately, if you decide at some point to buy or sell more loans. So that's a quick overview on that part. Azad, did you want to add anything?
Yes, thank you, David. Appreciate it, and thank you for having this discussion here. One of the things, the mortgage business is very competitive business. as a company, as an enterprise, we all need to be prepared for the unforeseen and foreseen events like the ones we experienced over the 2.5 years. As a company, it pays to have a servicing option, like what we experienced back when the pandemic started. The values of those assets literally plummeted to zero or almost zero. And the companies that were able to retain the servicing benefited from that. And right now, we're seeing a lot of those assets being sold in the open market through broker services and even directly among companies, getting the multiples that they didn't have back then. So, you could sell it bulk service, you could sell it as a co-issue. The option there is available for you. But the important thing is when you choose a seller, just like what Hakan was alluding to, even though there are a lot of buyers out there, it's important to choose and pick the right buyer for you to make sure that the efficiencies and the transfers are done, as efficiently as possible, and also to minimize your expenses and exposure to the market.
And this is everything we're talking about right now is very much in line with MCT's philosophy as well. We encourage and recommend and advocate for a conservative hedge strategy, but an aggressive best execution strategy. And that includes the servicing asset as well, looking for options, retain, release, co-issue, etc. So maximizing optionality can only benefit companies that are in the mortgage space. So again, definitely in line with the MCT philosophy. And then just real quickly wanted to talk just a minute here about trends that we've seen relative to retain versus released since the pandemic. Prior to the pandemic, for the seller servicers that are approved with Fannie Mae and Freddie Mac, 80% of the time, despite having that approval, our clients actually sold on a release basis, meaning that they're selling their production and their servicing to the aggregators. When the pandemic hit, quickly after the pandemic, that percentage flipped, where that 80-20 split became 30-70. 70% of the time, those seller servicers started to retain the production. Things have evolved over the last 18 to 24 months. We're currently at a 55-45 split, where 55% of the time folks are releasing their production, and 45% of the time they're actually retaining production. So you can see that it's starting to get back to that COVID behavior, just given the fact that there's pressure on profitability and revenue. Naturally, we should see a continued pickup in that release execution. So that is definitely the trending. We've got a chart that we've got that we're showing right now. You can see how that is shifting. And we do anticipate the released element to continue to climb through the balance of the year. All right, well, let's shift gears here. Let's move on to ensuring the execution strategy actually includes servicing considerations. Who would like to kick off that part of the discussion?
I can take that, Bill. I think one of the key things, talking about optionality, once you have that optionality, right, then the next step in that is to make sure that you're making the best decision based on those options. And while many people, many entities would simply look at the price and look at the price by itself, and that's their sole decision-making tool, it definitely behooves everyone, especially in environments where costs are becoming going up, but more importantly, revenues are going down, and you need to focus a lot more on cost and controlling costs, is to work that factor into your decision making. So there's operational costs that are always associated with servicing transfers. Different servicers approach things differently. Some servicers are easier to work with, some are more difficult to work with. And you need to have the tools to be able to not only incorporate the cost into your analysis, but also determine and pick and choose between which servicers you want to do business with. Now, we do have which leads me to a tool at Freddie Mac that we have available, which is the transfer tool. It's called FAST, Freddie Automated Servicing Transfer. And it's a tool that basically automates the actual physical movement of the servicing asset from the seller to the buyer. Covering that in this call would take way too much time, but I'm just going to give you a quick overview. As a seller, all you need to do is upload your image documents into a portal, and that's it, you're done. Everything else happens behind the scenes with our tool, and the result of that to the servicing buyer is a data file in a format that they can use in their servicing system, as well as documents that are named, documents that are stacked in their orders. So for the buyer, it's easy and efficient, but for the seller also. So that whole process where you might have to data map, you might have to use each different servicer may have a different standard for documents and data. You don't have to do any of that. We take care of all of that. All you do is upload image documents. So most people would not necessarily factor that into their decision, but those are big cost savings, when you think about it and you work with operations folks to determine what's going on. The other thing I would say is the ability to manage your partners. So getting as many partners as possible is great, but you also want to be able to manage them. And managing them means not necessarily whether you sell or don't sell, but are you willing to sell to someone at a price concession because you want to do business with them, you like them as a servicer, or are you willing to sell to somebody who you may not necessarily like as much, but you would if the bid is compelling enough? Those are things that I know MCT can help you with. Freddie Mac has tools as well, but these are, you really need to kind of get more granular now with how you manage these businesses. Once you get the optionality in, you don't stop there. Now you look for tools that help you really dynamically manage the profits that you can make from this, from selling or servicing.
Yeah, that's great, Hakan. Great overview. And I know that Azad's got some strong opinions on this as well. What are your thoughts, Azad?
Yeah, I mean, I totally agree with Hakan. I mean, we've seen co-issue trades, we've seen bulk trades. The sellers decided, not to pick the highest bidder for those issues. I mean, avoiding potential issues with the transfer, and they end up choosing a lesser price, but they know the buyer that they're working with, they know how they operate, and they know the business entity as well, and they decide to pick a less price in exchange for a smooth transition from from their business to the next.
And then some transitioning off, that's all great. Agree with that. I think it's not uncommon for servicers to as they're thinking about servicing, use a blunt instrument, right? Apply static multiples, where we can see in the current market that if you're not getting strategic and getting more granular, it will be a strategic disadvantage for servicers. David, what are your thoughts? Kind of moving on to thinking about servicing retained versus released, other elements. What are your thoughts on that?
Yeah, a couple things. I think we touched on this a little earlier, but certainly the setup side for the lender. So in other words, if they set up their servicing strategy, whether it's to whether it's to bring servicing in-house or whether it's to subservice, there's personnel costs and things that go along with that setup and process that goes with that. So on either side. So certainly doing subservicing when you first get started is tremendously easier. I really would not encourage anybody to try to do this on their own, but that's an opinion. But certainly we can help you through that with what we witness and see in the industry. But you'll still, even if you go the subservicing route, you'll still have to analyze and pick a subservicer and then obviously staff for it. And secondly, once you're ready to bring loans on, kind of as Hakan spoke to earlier as well, then it becomes, how do you decide which loan do I keep versus which loan do I sell away? And so fortunately, we have a very specific tool. It's called Enhanced Best Execution, which really takes that into account. It compares at time of loan sale, it'll compare your best aggregator price to what the MSR value, the live MSR value is of that loan at the moment. And then it's a cash flow model, so it takes tax consequences into account and helps you net out and figure out what's the best option for you. the good thing that we've seen about this is it really takes the intuition part of it out. We've had it whenever we have these discussions, the ones that the model recommends to retain aren't always the first pick of the lender. So it's a good chance for education on prepayment speeds as well. So anyway, that's kind of how we can help in that particular regard, and a tool that we can talk to folks about. So I don't know, Hakan, I'm sure you have some thoughts to add to that as well.
I mean, the best next decision, that's, that's what it's about, right? But again, the granularity, I think, becomes more important in situations where margins, are stressed, and being able to manage it more dynamically. Like you said, it can be on an individual loan basis. The good thing about, the Freddie Mac programs, especially cash release exchange, is you can sell one loan, you can sell no loans, you can sell as many, your whole book. You get to pick and choose how you come in, when you come in, and you're going to get the best X of right now, what is 10 servicing buyers on the back end. And then you have the benefit of that reduced cost through the fast Freddie automated servicing transfer tool. So dynamic, it's the key. You've got to be looking at everything, and you've got to make holistic decisions, and you can do it on a low level basis.
So building on the operational aspects that Azad spoke to earlier, actually, Hakan, I was at Freddie Mac when you were building out the FAST program, and that's an important consideration when thinking about Best X. It's not just sort of the multiple. It's not just the 25 basis points. It's also how fast is the transfer going to get processed. So maybe you could speak a little bit to the FAST program and definitely some material efficiencies from that program.
It is efficient. Again, it makes it very easy from the servicer standpoint. So if you're participating in cash release exchange, you don't have to worry about a particular servicer's process for transferring the servicing, because the tool takes care of all of that. And so that's a unique situation where you can actually pay attention to the bid and pay attention to the SRP and not worry as much about the transfer, because we've normalized it. It's the same for any of the buyers that we have, any one of the 10. And from a seller's perspective, it's as simple as making sure your image docs are uploaded through this portal that's available through a loan advisor right now. So that does make that decision easier. The costs, certainly the costs on the seller side, are taken out because of anybody that would have to be working with the buyer on the data mapping component, matching the data up to the buyer's needs, and also the documents, making sure the documents are in a particular stacking order. Now, there's some sellers that, or some buyers that don't ask the sellers to do it, and the buyers do it, and there's the efficiency for the buyer. So, one thing to keep in mind is if we're taking cost out for the buyers, then we should have a pretty competitive bid in this program as well. And I can say that when the coaching market basically disappeared in 2020, at the beginning of the pandemic, cash release exchange was pretty much the only game in town at that point that had a positive valuation, and that, yeah, they were small, but better than zero. And that's, again, part of that is because we've taken cost out for the buyers, and so they can still kind of come in, and with uncertainty, they still know that it's going to execute efficiently and at low cost for them as well. So.
Hakan, with the popularity of the exchange program increasing, can you tell us how many buyers you currently have on the platform, and are you looking to add more?
Yeah, so we have 10 buyers on the platform right now. That's up from, I think there was 6 maybe 2 years ago. I will say we're getting a lot of inquiry. We have a lot of buyers asking to be on the program. The program is, what we want to do, however, is we want to make sure that the bid is consistent, and we're always going to have a bid no matter what the market is. And because of that, we're pretty strict about who gets to participate in that particular program. And many of them are bank owned. Many of them have affiliated with a bank. And as we know, the banks tend to be a little bit more stable, even in poor markets. They're not, because they're not necessarily looking at it as an investment. They're looking at it as customer acquisition. And I think that's in large part what drove the ability to still have a positive bid in that program during the pandemic, because the bank, if they win that asset, if they win that MSR, they're also gaining a customer. And so rather than look at it purely as an investment that when the market's against you, you jump out, and when the market's good, you come back in, they're a little bit more steady. So our criteria is pretty stringent for that program, but we are getting, I would almost say, overwhelmed with buyers wanting to participate right now. So we're very choosy, however.
Yeah, that's perfect. Great growth, great development. So that closes out this first session. Hopefully the listeners have two key takeaways: the importance of leveraging options in a volatile market and having those options available when you hit that volatile market. We know it's coming. We're in it now. So options, the more the better. And then secondly, ensuring your execution strategy includes servicing considerations, not just the price, but operational aspects as well. Retain release, in-house, subservice, all of those considerations need to be evaluated as you're doing your best X analysis. So thank you for joining, and thank you guys for your participation. Appreciate it.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks, everyone. Really enjoyed the conversation, especially around how technology and integrations are making these processes easier for mutual clients. Speaking of, if you'd like to get in touch with anybody on this call or contact Freddie Mac or MCT, I'll make sure the information is included in the description of these videos. We're excited to get into part 2 next time, discussing benefits of Freddie Mac approval and MSR retention strategy, along with a review of how cash flow and capital position may affect your retain versus release decisions. Thanks again, everyone, for joining, and we will see you next time.